Hi guys, and welcome to this week's episode, or this month's episode of Navigators Vault. This is episode 4. So today we have... I'm going to go on a bit of a rant.
He's been fuming.
Yeah.
He's going to go on a rampage.
I've been fuming at the what I like to call finance talk. So that is TikTok and everyone on there saying you can invest in the S&P for 40 years and be a millionaire and all that twaddle that you guys hear. Anyway, kicking it off. First of all, we will start with our predictions on last time. So that was 2 weeks ago on the 3rd.
Yeah.
The predictions were which AI agent or infrastructure play will go up the most. As you probably know, we actually haven't really gone anywhere. But let's see how we fared. So
Probably going to be who's gone down the least.
yeah. Well, who did you pick, by the way?
I picked Game.
Game.
I know it's been slapped because I have it in my portfolio. You had Arc.
Yeah, let's check that sharing. There it is. Right, so this is Game. We launched on the 3rd. You can see that here. Since then, it has gone down from peak around 50%. So from peak,
Great
Josh
shout.
is down 50%.
Yes, great shout.
Good work. Arc. So this was my pick. So from the 3rd, could be a different story. Let's have a look. 3rd, where are we? 8th, 7th. Shit, we timed the top again. But
You win with 25%.
we're down 25% instead. We were briefly up, what's that, 56? Were you briefly up at all? From the 3rd, I'm not sure.
But the market cap on that's only 29. You got a 10x, 10 times the size market
Doesn't
cap.
mean anything, mate. Yeah, Josh, no gains at all over that 2 week period. So unfortunately, you've lost that one.
Yeah.
Right. To go into macro, whilst I have the other thing open up on the screen.
Go back to Are you doing sharing screen still?
No, we're still good, mate.
Cool.
Back to macro. These are some charts. I may have showed them last week because there hasn't been a new one to come out, but I just want to go over a few again. This is global M2. As you can see here in January or August 2016 to January 2016, and then global M2 today in the turquoise colours here. And you can see they've been nicely tracking since the start of the year. If this is to continue, great, lovely. Everyone should be a winner. So going on to the next one, I think I showed this last week as well. This is global M2 versus Bitcoin. And you can see every time the M2 in white here breaks out with these dotted lines, you can see Bitcoin then has these beautiful rallies afterwards. And what have we done? Even if you were to draw a cursor a bit further along here to say when we actually hit that rebound was the bottom of COVID, we had the rally down here, had that rebound, and then this lovely here was resulted in this expansion of M2 there. And what I think we'll see now is, or going forward into this year, and maybe early 26, could be a lovely rebound for Bitcoin and risk assets. I also want to cover a couple of things with the ISM. Now, just for the sake of this video, the ISM above 50 good, ISM below 50 bad. Okay, if you want to know what the ISM is, go away, ask ChatGPT, ask Google, and it will give you a brief description of what the ISM is. This is Bitcoin and the ISM. Now, as you can see here, ISM in this chart is below 50. The up-to-date ISM has actually had its first tick in the last 2-3 years, I believe, back above 50. So we are now back above 50. As I just said, 50 good, below 50 bad. Well, this is in the context of altcoins and risk or high-risk assets. So above 50 good, below 50 bad. Chop. So this is Bitcoin overlaid with the ISM, and you can see as the ISM peaks, it gives you a rough idea of where Bitcoin will peak and vice versa. Also, where ISM bottoms, then we should have these lovely rallies for Bitcoin as well. So ISM is showing signs of bottoming. So what would be next? A cyclical updraw doesn't even make sense. Cyclical rise in assets. This is the one I mainly wanted to show. I did show this on Crypto Waffle, but I'm going to show it again here. ISM altcoins. Altcoins follow the ISM a hell of a lot closer than Bitcoin does, and you can see this here in the chart. ISM above 50, I say good. We just had our first tick above 50. Altcoins seem to be down in the dumps. Sentiment is at all-time low. Perfect setup, in my eyes, for a rally. So things are looking good on the horizon.
Yeah.
One other thing I quickly want to mention with regards to the tracking of some of the stuff we've been looking at was, do you remember the liquidity chart?
Yeah.
So we were tracking that over Bitcoin, weren't we?
Mm-hmm.
And that was looking pretty good. I think we've been doing it wrong. Okay? I think we should have been tracking it over total crypto market cap excluding Bitcoin. So as you can see here, if I get rid of all these drawings, we have followed this a hell of a lot closer, I would say, especially in the most recent weeks and months, than Bitcoin has. And Raoul Pal on Real Vision has been saying, obviously, as we get into the later parts of this cycle, Bitcoin will decouple from following the liquidity pattern, but altcoins haven't. So this altcoin liquidity chart that we're looking at now is suggesting some further downside in alts. One last bleed in the altcoin market before what looks to be the bottom. Okay, that'll be here on the chart. So this little kind of relief rally, dare I say, slight bounce from that big liquidation event we had on the 3rd. So that was actually the day we posted. And we timed that perfectly, recording before it happened. This slight bounce is probably not it. There's probably a bit more bleeding to go. So I wanted to throw that in there. People can do this themselves on TradingView. Just type in total 2 and then go into indicators and type in global liquidity index with offset, and that should come up, I believe. Then you can track this yourselves. So that's kind of the macro update. Things are looking good. Sentiment shit. I mean, how are you feeling about everything at the minute?
Yeah, I mean, it's kind of a don't look at it too much zone.
Yeah.
Which we've had a lot over the last year. Most people are bearish, I'd say.
I would say at the
which
minute, yes.
makes me a bit bullish.
Yeah.
I'm bearish in the short term, as in I think we go down further. I don't want to, but I think we do a little bit.
See some more pain.
Just to shake out. I know you were speaking about it's kind of the 2017 market reincarnated.
Yeah.
So we're shaking out more and more people, and I think we still got another shakeout, and then we go.
Yeah. I think it'll be. It's kind of like 2017 in the sense of China, the ones needing desperate liquidity. So from a macro point of view, we've also seen, as of recent, a massive flush in some big memes. Especially also, if you haven't seen Crypto Waffle, me and Carl, Crypto C, talk about the Argentinian meme coin, the Libra, I think it was, that pumped to 4 billion. The president of Argentina tweeted about it, and then literally overnight fell to 100 odd million. He's since then up to about 450 million, something like that, which has had a nice rebound, but a lot of money's been drained out of the system. We obviously had the same with Trump, same with Melania. We've seen Peanut the Squirrel go to the floor. We've seen Fartcoin get absolutely hammered. Whiff's been hammered.
Brett.
Popcat, Brett.
Book of memes.
Yeah, Book of
Everything.
Memes. There's
Most of
them. But there are some stronger ones.
Yeah, we need to be looking at the ones that aren't the ones that have the strongest community that aren't selling off.
Yeah.
In the
Who are they?
Doge, obviously.
Yeah.
It's the biggest meme coin, so it's not going to fall off as much as the others. But there are some surprises lower down the level. You got Shib and Pepe as well, which is still pretty big.
Memes. Yeah.
That have massive followings, obviously. But Miggles, I know we speak about Miggles every podcast.
We've got to shill our own bags, I'm afraid.
It's only a £70 million $70 million market cap.
55.
It was before the drop.
Oh yeah, yeah.
Like 70 million, 50. It's at 58 at the moment. So
yeah,
this you've seen Dogecoin fall like what 15%.
Something like that.
Something
We'll have a look
like
at it on the charts.
And you've seen bigger ones like Brett or Whiff fall even more, and Miggles has only come down about 5%.
Yeah.
And for a coin that small, it's
obviously not
really.
financial advice. We don't offer financial advice. We're just complete degens. But yes. So to go on that subject, Doge. Should we go from local peak to trough, like max drawdown, just to show? So we'll go from the local peak of Doge is around 47 cents. We have peaked down to around 20, but we're currently sat at 25. So a drawdown of around 46%.
Which is still quite big for a 50 billion.
It's still risk, but it's nothing compared to, say, Whiff, which is down from peak to trough 87%, or say Brett, which is down from peak to trough 79%, or Popcat, which is down from peak to trough 88%.
Yeah.
The stronger ones, as just mentioned, one being Pepe, from peak to trough, we've seen 67.
Still
better,
quite, yeah.
10-15% better. Shib, I mean, that actually might be the same. Local peak to trough, 53.
So it's around 50 again.
Our favourite, Miggles. I just want to get these peaks correct. So
which peak are you going to go from? Go from that one.
Yeah, so 2nd of December. So around December, is that one there?
No, that's November.
Yeah, well, he's here. Let's just do it from here. From
Still
here,
quite a big drop.
71%. Yeah, but then from this one here, we had 63%. I mean, considering we just looked at all those others, and they are multi-$100 million, if not billion-dollar market cap memes, and Miggles is sitting there at 53, it's shown some strength.
It's got a great community behind it.
Yeah, I just want to show some Miggles charts as well. So this is a Miggles against Doge. So in this chart, for ladies and gentlemen watching, if the price action is going up, Miggles is performing better than Doge. If price action is going down, Doge is outperforming Miggles. So here, if you had a fat bag of Doge, you wanted to trade into Miggles, you don't want to be doing it yet because Doge is currently outperforming. And if you did zoom into this wedge, you can see we have currently broken to the downside, which would suggest Doge outperforming Miggles for a bit. Same can be seen here in the Miggles turbo chart, which is actually a lot more bullish for Miggles structurally. So this is how you can compare some of your assets.
What's Turbo's drawdown been?
What from peak?
It's below, go down.
Let's have a look.
You got it there.
So it's been quite a drastic drop. I'm glad to say that I got out in good time. Didn't leave any.
I'm still in.
Funds on the table, but it's down 78%.
I took out some at the top, but I'm still in at the bottom.
But you also got to remember, you have done like a 15x.
Yeah.
Something like that.
That
So really, a drawdown of 78, not that big of a deal.
Yeah.
In this scenario, because you were buying
down here.
So let's not worry about that too much. And structurally, on a bigger time frame,
I still like Turbo as a play.
That could be classed as a bull fag.
I still like it.
But if you lose that there, if you lose the 0.003,
no, we're not going to.
You probably want to cut it quick, because then
that.
that definitely opens up coming into this red box, and that is a further 58% drawdown from here. So if that altcoin chart is correct, and there's continued drawdown to go, Turbo could come in there. Watch your bags. I'll alert you, don't worry. Moving on.
It's that chart.
I quickly want to go over the watch market fine wines because that also ties into the ISM that we showed a minute ago. Unfortunately, I don't have the ISM overlaid with these markets on me. There is a chart out there. I need to find it. I'll try and do it before the next one. That's not the one I'm looking for. Here is the watch market. Overall market index. So the overall market index for watches in the last 5 years, actually last 2 years, is down 14%. If we put it on the max, you can see we peaked out at around 62.2, currently down 24. So what's that? About 20 odd % from highs, something like that.
But you can see it lags behind all the other markets.
It'll be 25%. Yeah, it does. So as I was saying earlier, the ISM picking up, altcoins picking up.
Yeah.
What's going to happen with these? Start picking up.
Yeah.
Since the peak in 22, March 22, which obviously for anyone that's in the crypto space, you'll recommend that being in the middle of the bear market.
Yeah.
So for reference, we'll quickly just show you March 22 on the Bitcoin chart. Please excuse my stuffy nose. March 22 there. Literally Pico bottom. So the Pico bottom of the bear market. What did I say for the other one?
March. It's a little bit further left, but roughly near the bottom.
Wow, yeah, you weren't far off. Okay, no, we're quite a way off. I'll take that back. As the Bitcoin market started falling over, that was when we saw the peak in watches.
As people are selling their assets, taking profits, they're going to
it makes sense,
rotating.
Doesn't it?
Yeah.
So if you've got a Bitcoin at 10k, you've sold it at 70, you've got 60 odd grand. What are you going to do? Buy yourself a car or watch, fancy stuff.
Something that holds its value.
Exactly.
Well, not a car, but a watch. Yeah.
Yeah. So that is what people will do, and as people start trimming this cycle, they will start buying watches and other things. And it's also the same thing with the fine wine index. So this is a fine wine index, and you can see over the last 5 years, this one here, the LiveX Fine Wine 50 is down 9%, and the LiveX Fine Wine 100 is actually up 8% over the last 5 years. These, again, will pick up, exactly like the watch market, when this ISM starts going higher. So if you wanted to make some money in these worlds, now is the opportunity, because you are buying at bear market lows. So for reference, you'd be buying in, say, here. You'd be probably buying in that, around that big green box in the wine and watch market. Obviously, that's to assuming we're going to bottom, but I'm very confident that they are bottoming at the moment. They are the sorts of things to get into. If you want contacts for people that will do that, drop me a message, put a comment in the bottom of this YouTube video. I'll be sure to put you in contact with some people that work in both those industries. But yeah, that's kind of that. Now, my big rant.
Here we go.
Yeah, here we go.
I'm going to go back to the...
I've been on the TikTok for a while. I say for a while. I've been sharing some of my reels on there, and when you share this stuff, you also have recommended things come up. And a lot of these gurus like to say you can invest $1,000 for the rest of your life for 40 years in the S&P 500, and you will be a multi-millionaire. A multi-millionaire from investing in the S&P. I'm here to tell you it's complete bullshit. Okay, it is complete and utter bullshit. So, for reference, let's start here.
You sharing screen still?
Yes.
Okay.
I think I am. So, for reference, starting here, the dollar's purchasing power since, when is that? Early 1900s has fallen to the floor. So if we scroll down a bit here, it says here, the purchasing power of the US dollar has fallen over time as money supply has grown. That is called currency debasement in today's terms. In fact, $1 in 1913 had the same purchasing power as $26 in 2020. Now, since 2020, we're now in 2025, and in this 4-year cycle, the bigger macro cycle, we're now up for refinancing all these debts we took during COVID. So what are they going to do next?
The biggest debt we've ever seen as well.
Money
20
printers.
trillion.
Yeah, money printers are going to be turned on. You can already see that.
I can't even believe how much debt they've got.
Yeah, you can already see that in these two charts here. So this is Euro M2 and Dollar M2. Where are they? Where have I put them? I thought I put them in this watch list. Yes, so there. Right, there's Euro M2. You can see that the Euro has started printing. We have made all-time highs. Bullish. US M2. We're not there just yet, but we are on the verge of creating all-time highs. So, yes, up and we go. China, I don't have a picture on me, but the PBOC's balance sheet has been expanding as well. So, you might be asking, okay, if these gurus are wrong, how am I actually going to make money? So, this is where we get down to the nitty gritty. Let's assume, now I've been doing some work here at ChatGPT, my good friend. Let's assume the interest rate, your annual rate that you need to beat to actually be making money is around the 15% mark. So that equates for a general inflation rate of around 3 to 5%. You then have some taxes, obviously don't really take that into account, but you have inflation to 3 to 5%, and then you have currency debasement. You can see ChatGPT talks here about 2 to 3% in taxes and blah, 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 but I'm not going to take that into account. Okay, we know the currency debasement rate is actually higher than 2 to 3% because in 2020 alone, the Fed printed, $8 trillion or whatever it was. And that was X amount of the supply. And then we also know inflation is a lot higher than it is anyway, because a Freddo Frog when I was a kid was 10p, they're now £1. Perfect example.
That's the perfect way to measure it.
Or do you remember the little 10p bags of Haribo you could get?
Yeah.
Or 5p bags.
Yeah.
They're now like 50p. Like it's mental, 40p, whatever it is. So we know inflation is actually probably in the real world closer to 10, if not 15%, if not more. But conservatively, we're going to say it's at the lower end if you want to believe the government's data. Your hurdle rate should be 15. I actually look at a hurdle rate being a minimum of 25%. So if I'm not making 25% on an investment, I am losing money. That's the way I look at it. But let's use 15% for this scenario. So how do you make 15%? Well, the average annual return in the S&P is around 10%. So it says here, the lazy 40-year S&P myth debunked. What happens if you just invest in the S&P? The S&P's historical returns around 10% a year. Okay, so going forward, you can get 10%, but you're still missing 5. So you're still losing 5% a year. Yes, on your screen, your money will have gone up. But in purchasing power, if you were to take that out and go spend it, it's not going to get you as much as it did the year before that.
So he's not saying if you bought S&P every month until you're 60 now, you would be a millionaire, but it'd probably be worth about 10p.
Yeah, in purchasing
it'd be
power.
Worth, I don't know.
So you could have 40 million in the bank at the age of 40. So perfect example, you're what, 21?
Yeah.
Right. Josh has 19 years till he's 40, sorry.
Yeah.
Right. If he invests in the S&P every month, blah, 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 he'll be a millionaire at 40. But by the time he actually gets to 40, his 4 million, whatever it is, $1 million. Should we do let's actually do it in live whilst we're doing this. We want to do compound interest calculator. My brain is so slow with a cold. It's very slow. So we will do this. Let's do this in person so you guys can see all of this, and all these gurus are chatting complete and utter twaddle. And yes, you can tag me in it and say, look, they're chatting twaddle. So let's assume you invest, what, $100,000? I know that's probably a bit much for your average person. Let's also assume you get that 10% a year annually, and you want to do this for 19 years.
So you're getting the max interest rate from the S&P.
Right, so let's do this. So your average person your age could probably afford, I don't know, what, £300 a month, £250 a month?
Depends who you're talking to. Yeah, just
let's take a more
300,
conservative. It's $300, which is around £250, £60, something like that. Based on the S&P's 10% over a 20-year period, let's change this to 20 years, 20-year period, initial investment $300 and then deposit amount monthly $300. Yeah?
Yeah.
Calculate. So, by Josh is 40 years old, he will have $230,000 in the account. Yes, lovely, great, I get it. Looks good. But in 40 years, what is your average Vauxhall Corsa going to cost you? rather than
Probably work it
15,
out.
20 grand a year
Type in what
today.
230 grand be worth in 2026, in 2046.
$230,000 dollars be worth in 2020. That'd be hard to work out though, because as the money supply increases, they have to keep printing more. Yeah, it wouldn't work it out. But in purchasing power terms, let's say you bought your Vauxhall Corsa for 15 grand. That's probably in 20 years' time, actually 30, 40, 50 grand. So your money doesn't go as far. Another example, a house. The other one that I hate, the government's help to buy ISA. Wow. Right. So you can put up to £4,000 a year in. So initial investment of 4 grand. You get the £1,000 bonus. Let's say you maxed out first year, £5,000. You get their interest rate. I think the rate at the minute is around 3.5-4%. You do this from the age of 18 to say 25. I think that's conservative, or 30. Just do 30 because nowadays people start having a bit longer, don't they? So at 12 years, and then annually, we top that up
with 4,000.
Well, 5,000 include. So you'll own 4,000, £1,000 from the government. Okay, so that to calculate gives you 80 grand. Okay, that's in a 12-year period from today. Wow, you have 80 grand. Okay, so what are house prices today? Where you live, where will they be in 12 years? Probably double what they are now. So your 80 grand is going to be 5%, maybe even 2-3% of a deposit.
Yeah, and that's if you max it out every year.
Yeah, it is not going to get you anywhere.
Hi guys, I can only apologise for what's happened. So whilst me and Josh were filming, we did have technical problems with Riverside, unfortunately, hence why I'm having to implement this short clip into the video. I just basically wanted to try and summarise and round up what we're doing with some more visualisation. I'm a visual person, so I thought that would be best. What I'm trying to get across to you, hypothetically, before I go into charts and whatnot, is that the traditional way of doing things, of investing in the S&P over the last 20, 30, 40, 50 years, whatever it is, as you can see on this chart here, this is a 3-month chart. So you can pretty much say, well, definitely since I've been around, I mean, I was born in 99, since 2009 it's basically been up only, and that includes the pandemic and any other things we've had during that time. Now, I think this will continue. I'm not saying this won't continue to happen, because I think it will. But over the shorter term, or the medium to longer term, actually, sorry, you won't be making actual money, if that makes sense. So yes, the S&P could go up another 100% in the next 10 years, but in the next 10 years, your currency has probably been debased well over that. What do I mean by that? So when I was a kid, we used to buy Freddo frogs in the shops, and they used to cost about 10p or whatever they were at the time. Nowadays, you'll be lucky if you can find them cheaper for £1. Just for a little Freddo frog that's probably about that big, tiny little thing. So that is inflation and currency debasement at its finest form. Another one that you might, or that's easy to try and understand, is property prices. So back when my grandparents were around, and not my parents, but grandparents mainly, they bought a house for 40, 50k, if that, 30k, and it was about 4 times their earnings. Now a house is going to be 8, 10, 12 times someone's earnings, depending on what job they do and where they're looking, but it's just out of reach. So that's another reason you can say, oh yes, it's inflation, it's not currency debasement, blah, blah, blah. It is currency debasement as well, because your purchasing power of your pound or dollar diminishes over time. So let's get into these charts. So this is the DXY. This is a dollar index. This is made up of dollars, euros, pounds, yen, mainly dollar and euros. Now you can see here, we're looking at this because the dollar is the world reserve currency. Okay, you can see the dollar peaked in 1985, and since then we've been in a gradual downtrend. So the dollar is losing its purchasing power. So what you could buy in 1985 your dollars now is going to be a fraction of what you could buy today. Your dollars were a lot stronger back then, and also back here in 2000 dot-com crash, your dollars, well, not a lot stronger than where we are now, but they were stronger than what you could buy. So how does this then fare to local currencies? So let's first of all look at the euro pound, because I'm from the UK. You can see if we zoom out, the pound has been losing its purchasing power or losing its strength against the dollar for, well, ever since on this chart 1971 and probably going back further. So in the UK, how can you not fight against it, but how can you protect your purchasing power of the pound? You hold dollars. You buy dollar denominated assets, be it stocks, crypto, whatever it is. You have to get out of your pounds and hold dollars. Why? We then go have a look at the chart of the Indonesian rupiah pound. Obviously, the pound isn't as bad as the Indonesian rupiah, but you get the gist. It's on the floor. And this is why you see so many people saying, oh my God, Bali's so cheap. Oh my God, Thailand's so cheap. Oh my God, Asia's so cheap in those third world countries, because their currencies are on the floor. So when I was out in Bali, I was educating some locals to start holding dollars, because look at the chart. It looks like it's about to create new lows. The same here. So this is US dollar versus rupiah. This is showing the strength of the dollar with the rupiah. It's bang at all-time highs. If it gets through this level here, it's making new all-time highs. And then Bali in Indonesia becomes very cheap for United States citizens to visit, because your dollar is the strongest it's ever been against the rupiah. This is what can happen. Obviously, the UK is a lot. What's the word? I can't think of the word at the minute. But it's not as a third world country as such, like Indonesia or some of those Asian countries. But still, you can see the pound strength has dwindled against the dollar for the test of time. Yes, we have these periods where it will outperform. And if you guys have been watching me in my Telegram group at all, you will know that I think the dollar is going into one of these down legs. How far does it go? I reckon around 1995, so something like here. But during that, the pound should rebound. So if we go back to the pound, we should see that the pound may look to make a move up here, maybe go back to 147, 140, something like that. But what I'm trying to get across is that the old way of doing things, myself, others included, around the world, in America, in the UK, in Europe, buying the S&P for the next 10, 20 years is not going to work. They have, or the Fed, the government that's in the US, have an absolute mountain of debt to refinance, as you can see here. They have to print money doing this. They have to. There's literally no way out. That makes the dollar weaker. Obviously, that may be good in a short term for the likes of the pound and whatnot, but then just look back to October and the Liz Truss thing in 2023, I believe. The Bank of England overnight printed, I think it was £800 billion. No, sorry, it was 800 million. Well, I think it might have been 800 million or 8 billion, one of them. But they printed a lot of money overnight just to save the bond market. Now, this is why when a lot of people, myself included, say, or when I hear people say, we're going to have a 1970s style crash. So if we go back to the S&P and we go to the 1970s, this crash here. So that is a, where are we? 50% correction in the S&P. Now, if you guys follow Raoul Pal's work, you will know that he reckons that this is now out of the question. It's not possible for the S&P to have a 50% drawdown. Why? So when we had the 2008-2009 crash, we had a 57% drawdown, and what did they discover? They discovered they could print money. They discovered they could debase their currency, and since then, you will see we haven't really had a 50% plus correction. This one here, so this was COVID. Try and get it accurate, was around a 35%. And you saw they printed a load of money over COVID, I think about $8 trillion. That's not even to think about how much money the UK printed, the EU, the PBOC, Japan, and all these other countries around the world. Not even including all of that, that was just the US. And then 2021, 2022 bear market, we had a 26% correction. So he now believes that the downside is limited. To what? Who knows? Is it 40%, 30%, 20%? I don't know. But he has been spot on with his thesis on crypto and Bitcoin. This is Rao in particular, and other people that I watch, Benjamin Cohen, a lot of the analysts on Maggie Lake's podcast, Darius Dale. Loads of these people have been spot on with their analysis of being long and strong risk assets for the last couple of years. And it's not to say we won't get a pullback. By all means, we can have a pullback. I think it's highly likely the S&P probably has a 10, 15, 20% pullback in the next year or two. I think that is very likely. We could definitely see the S&P down to here again, 4,750. That would make perfect sense. It's not going to be a straight line. I'm just trying to get across this finance TikTok I see, and people go, you can invest in the S&P and in 40 years' time become a millionaire. You can be a millionaire. In 40 years' time, though, your currency, your millions of dollars that you have, are going to be buying you nothing. Nout. There is only two assets that have outpaced inflation and currency debasement. NASDAQ, which is tech stocks, and crypto. The NASDAQ as a whole probably won't do it after another 5 years. It will then be individual stocks. It will be individual cryptos. Obviously, we know as Bitcoin gets adopted, there is, what's the word I'm looking for? Reduced gain as it's going up. The pull downs will be shorter. The rallies will be shorter. But at the moment, it's still outpacing. I think at about 125% a year, something like that. And if you then look at these charts against the likes of, let's just say Bitcoin, okay, just to keep it simple rather than every asset. Bitcoin has outpaced the S&P. Look, the S&P 500 is on the floor against it. Yes, it has these momentary periods, but they are not long-lived. You then look at, say, the NASDAQ versus Bitcoin, NDQ versus BTC. Again, on the floor against Bitcoin. Bitcoin is the ultimate. I'm not saying you have to go into the risk curve and start buying all these altcoins, all these memes, all this stuff. Just stick with the big guys. It's not financial advice, but just stick with Bitcoin. You haven't got to get fancy with it. You could even look at Tesla versus BTC. Yes, Tesla has these periods of outperformance, but most of the time it ends up back on the floor. Bitcoin is outperforming Tesla. It's the charts don't lie. Price is literally king. I mean, other people say gold. Yes, gold is good. Now I have this discussion with my father all the time. Gold is great for holding your purchasing power. So if I was to put money in gold today, in 20 years' time, it's probably the same value. I haven't lost any value. I haven't gained any value. Yes, on your screen or in your account, your gold is worth an extra 20 grand or whatever it is in that time period. But the purchasing power of that gold or dollars, whatever you sell it into, has got less. So if you're putting money into gold, you're not losing money, you're not making money. You're just holding its value. Okay, yes, you might have a little period. So if you got into gold, say, oh no, let's have a look at the chart quickly. If you got into gold in around December 24, and you've ridden it all the way to February 25, you have done really well short term. You've 12%. That's not bad for what, a 2-month trade. You could take it, get out. But over the period of time, it has, or I haven't got the charts on me, but I think it's some of Raoul Powell's work in one of his chart decks. Gold is negative. It hasn't made you any money. Yes, the price of gold has gone up. Why? Because they're debasing the currency. If they keep printing dollars, gold will continue to go up. Property will continue to go up. Bitcoin will continue to go up. Stocks will continue to go up. It will all continue to go up. Until that fundamental analysis of that they're not going to print money anymore happens, then you have to be long and strong in this stuff. Yes, it's not going to be a straight line, as I mentioned earlier. But I just wanted to try and get this across and try and make it a bit easier for people to understand, because it really does not frustrate me, but these people and financial advisors, they never ever bring up currency debasement, like ever. I used to have an account with St James's Place. I brought up currency debasement, and they basically said it's a nothing burger, don't worry about it, in other terms. And I thought, how can you not worry about it when I'm losing 5, 6, 7, 8% a year just because of their printing money? They don't care. They take money when you put in. As soon as I put in my £500 a month or whatever it was, they'd be taking a 3% fee off the top. They don't really care. They're making money either way, whether I lose or make money in the market. So people aren't explaining the full story, which is why it frustrates me the most. People think it's easy. It's not. So if you want to have a discussion with me about this stuff, I'm more than happy to spend an hour of my time having a discussion with you. So please be sure to drop a comment, drop me a message on Instagram, whichever way it is. But hopefully that's made you understand it a bit more. It's not a nice truth. I didn't like it when I first heard it, but when you look at everything around you and you see it all going up, you have no way of keeping up with the price of inflation on properties or on assets. You have to find something that enables you to buy this stuff. And the way I look at this is crypto for me. Mine's a very specific one at 25 and younger, but well, people between say the 20 and 30 probably have this small window of taking opportunity. But let's see how it plays out. This is what I believe. This is what I'm doing. I am basically 80% crypto, 20% stocks, and 1.3% gold or something like that, 1.5 last time I checked, and then a little bit of silver. But the only reason I hold them is in case the world implodes and I need to buy a cow of it. So let's see. Right, take care all. Once again, I can only apologise for the technical difficulties we witnessed. We will see you next time on Navigators Vault. Thank you for watching.